The different funds, of course, have different financial statements that are required for them. Governmental funds have a balance sheet and a statement of revenues, expenditures, and changes in the fund balance throughout the accounting period. We also use modified accrual accounting for some of those, and accrual accounting for others, and then we do a reconciliation between the modified accrual and the accrual accounting. Proprietary funds, so proprietary funds are those that operate as kind of their own separate entity or sometimes as business type funds. So looking at these, we have a statement of net position. Remember, this is very similar to a balance sheet. And then we have the statement of revenues, expenses, and changes in fund net position. So explaining why the amounts are different in our statement of net position from one year to another. And then a statement of cash flows. The fiduciary funds is when a government is working as a custodian or trust for an external party. Then the required statements for that are statement of fiduciary net position and statement of changes in fiduciary net position. Of course, we are going to create all of these financial statements in future chapters. So governmental activities, as I talked about this reconciliation, they are reported using an accrual basis on government-wide financial statements, but government funds use the modified accrual. So those fund balances have to show a reconciling in the government-wide financial statements. And of course, we're going to practice doing this also as part of future homework assignments. Okay, so we looked at these three different activities of government. So we have our core government services and our administrative staff. So core services, things that what does the government provide to its citizens, and then what is the staff that they have on to administer the government. Our business type activities are supported by user charges. These are public utilities, any public recreation areas in which there's a type of user fee, and then fiduciary activities in which the government is acting as a custodian or trustee of a monetary fund. Okay. Fund reporting is developed to meet the challenge of reporting revenues and expenditures that are legally or contractually constrained for specific purposes separately from revenues and expenditures without such constraints. So we have in government funding, there are funds that are restricted for very specific purposes. There are taxes that governments receive that can only be used for some things. For example, there is a tax that you pay as part of getting gas in your car, and there's a percentage of that amount that goes towards infrastructure, so road repair. So fixing roads. So the tax that comes into the government can only be used for that. Okay, governments also have general purpose taxes that they can use for any of their services. So why we have fund reporting is to recognize that there are different rules and obligations for different sources of revenue, and it separates those out into various funds. Our fund is a separate fiscal entity. It has its own resources, its own liabilities, and its own operating activity. So it has its own set of accounting records. It operates within the government as a separate entity, but the overall reporting reports to the government-wide financial statements. So different types of governmental funds and different fund activities for governments. Okay. We have 5 different types of governmental fund categories. So first is the general fund, which is the main operating fund of the government. This is where our operating activities occur, and activities such as public works, police, and fire. That also is where our city administration sits. Okay, special revenue funds are for taxes that are created for special revenues, such as the gas tax that is used for infrastructure repair or road repair. We can also have get a grant to build a new library, or a grant to overhaul our main street, different grants that exist. Those would also be operated under a special revenue fund. A debt service fund is required in the case of a bond. So governments frequently use bonds as a way to generate cash for different services. Sometimes you'll hear that there's going to be a bond issue vote. There's going to be a special vote on bonds. This is often how they build new schools, do major repairs to public schools, build libraries, etc. A debt service fund is used as part of that maintenance of a bond. Then we have capital projects funds. Capital projects funds are to make sure that we separate and set out aside money for upcoming capital projects that the city is interested in participating in. And then permanent funds. So permanent funds are for endowed funds. And what endowed funds are funds that have been donated where the city can only spend earnings on the funds but cannot spend any of the principal. So if I, as a citizen, I go to the city and I donate $1 million, and I say, but I want this $1 million to be used to fund a section of the library for as long as the fund exists. And as part of that, to make sure that there's always money available for this special interest that I have to fund as a donor, I'm going to say you can never spend a penny of that $1 million, and you can only spend the earnings on it. In terms of these restricted endowments, then entities will invest them, and then they can spend the earnings on them. So whether they get interest earnings or dividend earnings, depending on how they've invested them, those are what can be spent then on the initiative. And we're going to talk a lot more about endowments, especially when we get to university and college accounting. Okay, our proprietary funds. So we have 2 types of proprietary funds: internal service funds and enterprise funds. So internal service funds are for goods, services, departments within the same government. Okay, so these are things like purchasing, supplies, if we have a motor pool, so there's a set of city-owned cars that employees can use for work purposes. Enterprise funds are for those business type activities. So activities where we get fees from the users. So these would again be more like our utilities. Okay, and then fiduciary funds. So fiduciary funds are where we're acting as a trustee or a custodian of funds. One of the most frequent ones that governments have are pension funds. So one of the few places, if you've taken intermediate accounting, you may have already covered pension accounting and pension funds, knowing that city governments, state governments are one of the few places where defined pensions and funded pensions still exist rather than 401k funding or different funding nights. So they have to report that they have enough money to meet their pension needs. Okay. Then we also have investment trust funds and private purpose trust funds. Example of a private purpose trust fund would be, for example, if somebody set up a scholarship. So one thing, there's a scholarship through Waverly that people who are interested in electrical engineering or working in electricity, so through the city government of Waverly, they have a special scholarship that is set up that students can apply to the Public Utility Board for a future work in electricity. Okay, we have fund balance classifications. So non-spendable, restricted, committed, assigned, and unassigned. So non-spendable are things that can't be spent. So inventory is it's a monetary asset, but it can't be spent like cash. Supplies, those types of things. Restricted funds are things like endowments, or so those are on external sources, or things that are restricted for legislation purposes. So we might have a fund that can only be spent through a vote. Committed funds are the amounts used for those specific purposes. Such as we've decided to generate revenue for a new park, and so we're creating this pocket of committed funds. Assigned funds are neither restricted nor committed, but we are assigning them to a specific purpose, and unassigned funds are general funds that can be used for any reason. Of course, most of our funds fall into one of the top 4 classifications, and it's rare for governments to have a significant amount of unassigned funds that they can use for any purpose. I'll pause here. Okay, I'm going to go ahead and finish since there are only 4 slides. Okay. Major fund reporting. Governments can have multiple different funds, but what they show in their report are major funds. So GASB requires separate reporting for all major funds, while non-major funds can be grouped together and reported in a single column of all non-major funds, and it can just be total of all of those funds grouped together. But major funds have to be separated out into their own columns. Okay, so what determines whether it's a major fund or a minor fund is really the size of the fund. So total assets, liabilities, revenues, or expenditures of that fund are at least 10% of all funds. Okay, so if the total of all of my funds combined is $10,000, then if any portion of a fund is 10% or more of that $10,000, it's considered a major fund. Okay. Then the same element that met the 10% criterion is at least 5% for all government and enterprise funds combined. So it's a materiality issue that determines whether it's a major fund or not. Okay. Non-major fund reporting, they can be reported in a single column for GASB reporting, but governments might decide to share additional information as part of the CAFR or other reporting. Governments, and of course, can always choose to give more information